Welcome to Buy, Hold, Sell. I'm Jeremy Hook from TMS Capital. Joining me today is Tom Richardson from Watermark and Daniel Moore from Investors Mutual. We're going to look today at 5 top stocks in the 100 that pay sustainable dividend yields. It's cold outside, but dividends keep you warm at night. Let's look at some that screen as sustainably good dividend yields. And we'll start with Tom. Let's have a look at Crown.
Yeah,
Buy,
Crown,
hold or sell?
Yeah, it's a hold for us. They've done a good job managing the portfolio, focusing back on the key assets. But VIP's had a bit of a recovery and we just think stock does a bit of time here.
Great. Daniel, Crown, buy, hold, sell?
We agree. It's a hold for us. Great assets, very strong balance sheet, decent yield, 4.5%, but post the recent re-rating, it's a hold for us.
Infrastructure stocks do meet the criteria of sustainable dividend yields. AusNet, buy, hold, sell?
That's a buy for us. We think it's a great opportunity right now, post the recent regulatory announcements, which have been pretty negative for the sector. For AST, we think they're pretty benign. And today you can buy it on a yield of over 6%, fully franked, with some reasonable growth in the medium term.
Tom, it's certainly a good yield and got a bit of growth too. Buy, hold, sell for AusNet?
It's a sell for us. I think that there's a lot of industries which are under regulatory focus. This is one of them. I think the next few years, the regulator's definitely going to try and get down the returns for some of these assets. They've had a good run, and we just think they're going to be in the crosshairs for some time.
So regulatory issues, will they affect AGL as well? Buy, hold, sell?
Yeah, similarly, that's a sell for us. Clearly in the regulatory crosshairs there again. Also, the business is probably over-earning in a few areas, so we think rolling forward in 3 to 5 years, it's going to be hard to generate any earnings growth, so too many headwinds for us. It's a sell.
Okay, Daniel, AGL's dividend was stable for a while, took a big jump up last year. Buy, hold, sell?
It's a hold for us. Despite the share price coming back a bit, the medium-term outlook is a bit challenging, particularly with the Liddell plant closing down. They will have some cost out, some self-help, but at the current levels, it's a hold for us.
NAB's spin-off Clydesdale Bank paid its maiden dividend not so long ago. Is that one to watch? Buy, hold, sell?
Yeah, that's our preferred bank in the whole ASX. It's the cheapest. It's trading around book value. It has the strongest lending criteria, has the strongest capital position, and the best growth outlook, particularly post its acquisition of Virgin Money, which we think will provide very strong earnings growth for the next 2 to 3 years through the synergies.
Great. Tom, what do you think of Clydesdale?
Yeah, absolutely a buy. We share Daniel's view. It was a buy before the deal, and post Virgin Money, we think it really just supercharges the investment. Economically and strategically sound, good crossover in terms of regions, good synergies. We think this stock has a lot of upside.
Okay, what about Dulux? It's had a doubling in dividend in the last 6 years. Buy, hold, sell?
That's a buy for us. It's a bit of a sleeper. We've seen a really big re-rate in growth and quality over the last few years, and this one that's really missed the boat. People are worried about the housing cycle. Clearly that is a concern, but we think this is one of the strongest brands and one of the strongest management teams in the country, so we think a good sleeper, and that's a buy.
And Daniel, what do you think of Dulux, a great performer? Do you agree with Tom?
It's a great company with great brands, but it's a sell for us. We just think at this point in the cycle, there'll be better times to buy.
Okay, with dividends like that, it's time to come in from the cold.